beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Nikkei is currently trading with gains of 4.5% at record high levels.
The support here, 24,587. It's the recent low, and that will be the same for the Nifty Bank as well.
India has fallen short just because of lackluster earnings coupled with higher valuations.
It has to be an understanding where our bottom lines, our red lines are respected.
So 24,916, absolutely flat. Nifty Bank is up about 0.4%.
What degree of an impact the lack of a India-US trade deal is very difficult to assess, of course.
If you look at our housing business, affordable housing is the fastest growing segment there.
Now this year, FY26 would be better than FY25.
I think third consecutive day of gains that we are seeing on the Nifty.
Their rates have been revised for the first time significantly since 2014.
Now moves on to October 13th as the government has sought more time, and which is why we're seeing the stock come off once again from the highs of trade.
170 or 180 point gain on the Nifty currently.
Well, that is the day so far. Market is up 170 points. 25,065 is where we are at. This is Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant with me, my colleague Surabhi and Reema here in the studios. Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, afternoon. Good is only getting better, right? At the day's high, 160 points up now on the Nifty and 25,000 comfortably scaled past.
It's looking increasingly good, and obviously financials have been helping right from the word go. But today, for a change, IT is well behaved also. So you have the twin turbo engines firing, financials and IT. So no complaints for the bulls, at least right now, Nigel.
Well, that's right. And the Nifty Bank, it was on a losing streak. Guess what? We have 5 sessions on the trot that the Nifty Bank actually is up. And that's clearly leading the way. So the RBI governor clearly, fueled sentiment out there. What he had to say excited the market. And that continues even today. And now ahead of the festive season, the hope is that, consumption picks up. And all in all, earnings for the second half of the year looks much better than what we're going to see in the first half of the year. A green-looking screen, a good start to the week.
Absolutely. And let's hope we're able to build on it and we don't give up the advantage early on. BSE started, we spotted this early on. The bulk of the move happened by about 11 o'clock. Since then, there was a brief sell-off which happened at about 11:30 or so. But it's moved higher. And now it's almost up about 6%. So 22.12. And this is the start of the week. So we'll see. If there's more here, from the top, the stock had lost almost about 1,000 rupees, a little more actually. So, something to keep an eye out on. We'll ask our guests as well what they make of this move. How should you position yourself in the last hour? That's the question. Mitesh is with us with exactly that answer. Mitesh, what's your sense? Will this last, and what to do about it?
Prashant. So, earlier I said the Nifty could face resistance around 25,000, but the Bank Nifty, if it starts getting past 55,800, 900, in turn could propel the Nifty also. So, I think that's happening. My sense is that the Nifty, as long as it closes about 25,000, good chance that it would try to attempt levels of 25,250 and even in a good case scenario, 25,400. So, these are the two targets which I'm working with. And on the Bank Nifty, I think, closing above 55,900 should suggest further targets of around 56,500 or even 57,000 to about 57,100. And on the stock side, I have BSE, in fact, one of the recommendations. Buy with a stop at 2184 for targets of 2275. And the other one is United Spirits, which I would recommend buying the stop at 1339 for targets of around 1380.
Mitesh, we're seeing this bounce in IT, perhaps from oversold levels. But is there more strength in the Nifty IT or any play on individual tech stocks?
Most of these stocks had fallen a lot. They had also, come to their historical support areas, which were made about a couple of years back. So TCS, I think, a good support around this 2900, 2850 zone. It's reversed from there. The first target is around 30 to about 30.50, and once it crosses that, I would even look at higher levels. Similarly, Infosys needs to close above 1480. That should suggest levels of 1420, and in a good case scenario, even 1550.
Okay. All right, Mitesh, got that. Thanks very much for the calls. We'll come back to you for some more ideas in a bit. But right now, let's put the spotlight on financials, because the slew of banking updates that have come in, I mean, it's more good than bad for sure, which is why you're seeing the excitement on the bank Nifty and overall on the NBFC lot as well. Let's in fact go to Gaurav to get a lowdown on some of the most important updates that have come in today. Gaurav.
Well, yes, many banks came up with their business update, but let's talk about some of them who actually outshined. First, let's talk about HDFC Bank, because loan book growth, now it stands at 9.9%. Remember, the system is growing at around 10.4%. So definitely it seems that HDFC is picking pace in line with the system. When it comes to deposit, that growth was at around 12.5%, which is again higher than the system. In this quarter, the quarterly growth for deposits was at around 1.4%, and that is the reason why the LDR ratio that went up to 98.8%. Remember, the management said that they want this ratio to be around 85 to 90%. Other than that, let's talk about Kotak Mahindra Bank. There also we saw a good set of numbers, around 15.8% growth in terms of advances and around 14.5% growth in terms of deposit. So very strong set of number for a bank of a size of Kotak Mahindra Bank. But remember, let's not forget, last quarter, bank came up with good set of numbers, but the growth was driven by corporate banking, and at the same time, they also delivered NIM decline, which was not anticipated by market. So definitely, let's watch out on these numbers when the numbers came, specifically in terms of results. Lastly, let's also talk about Bajaj Finance. Here also we saw a strong set of numbers, 23.5% of growth versus guidance of 23 to 24%. And additionally, the new customer base which was added, that increased almost by 25.6%. So again, very strong set of numbers, and this stock is specifically in focus because of the GST reforms that we have seen, and given that a large portfolio is now catering retail. So definitely good set of numbers for Q2. So let's watch out how ROA comes for Bajaj Finance in the results.
Okay, all right, Gaurav, thanks a lot for summing that up neatly. Well, let's welcome Gurmeet Chadha onto the show. Hi, Gurmeet. Good afternoon. Good to see you win. What's your take with regard to these financial / banking updates that we have got? What are you all most bullish? What do you all have, and what do you all build on post this update?
Hi, Nigel. Always good to connect. Extremely constructive on financials, Nigel. I think the RBI policy was more a credit policy than a monetary policy. And two changes. One, in terms of removing the upper cap on 10,000 crore in terms of corporate limit and allowing acquisition finance, to me, are big game changers over a period of time. And we've seen a lot of large acquisitions either being done through bond issuances or through structured deals where you are, also using other tools, including private equity. I think this would be very helpful for the banks, and I'm not surprised with the way banks have reacted. So we've added more to ICICI Bank. It hasn't done much for almost a year. We have SDFC in the portfolio. We've recently added RBL also. They have announced a fundraise of 3,500 odd crores, but they haven't announced the names in terms of maybe on likes of Yes Bank and others. Maybe a large institutional investor can come there as well, like what has happened with Yes, Shriram, now Samman Capital, reasonably valued. And we are building on to already what we have in terms of NBFC space, which is Jio Financial, Bajaj and Chola. So we are pretty overweight as far as financials are concerned.
Gurmeet, Aditya Birla Lifestyle, do you...
Looks good, and it's turned around since Vishakha has come, especially in last 18 odd months. Even their asset management arm now seems to be doing very well, including the MC business. We like the MC business more over capital. Reason being that this is more annuity driven and less prone to transaction volume like exchanges and depositories are. And the mark-to-market impact on markets going down 5-10% is a lot lesser. And mutual fund portfolios are only going to pick up. So we like AMC over the capital business, but capital also looking good. Even Edelweiss, I think, as I said, you're spoiled for choices right now as far as some of these financial goes.
Okay. All right, Gurmeet, stay on. We want to discuss some of the hospital stocks with you as well, which have had a really, really healthy session, one can say. And the reason is that after many, many years, the government, central government, through its flagship CGHS scheme, they finally decided to revise the rates that are paid to hospitals under the CGHS system. In fact, we'll get in Ekta in a bit on this. She's going to be joining in shortly. So that's one active side of the market. The other, of course, we discussed banks. A lot of the NBFC, large NBFC stocks are also having a really great afternoon. Case in point would be Shriram Finance. Bajaj Finance is also up about 2%. Speaking of NBFCs, Gurmeet, hi, good afternoon. There's a new kid on the block. Well, hardly a new kid. Comes with the pedigrees of the Tata name. Tata Capital, I wonder if you have any thoughts to share with viewers, whether you were enthused by the issue or not. I mean, at one point in time in the so-called grey market, I think shares were trading northwards of 10,000, northwards of 1,000. But it's being offered at around 326. Your views on NBFCs?
So as I said, it would be pretty constructive. I think Tata Capital has priced it very well. I think unlisted, there was almost a mania going on. It did not make any sense at 1,000 rupees. Was trading at about 8-9 book value. Probably the peak at which Bajaj Finance used to trade. I think now it's more like 3.25, which is more reasonable. They've been growing well. And because the cost of funds have been lower, and obviously it comes from Tata, so even the risk management framework, the asset classification, if you see, the credit cost has never really been an issue, including 2019 when it happened. So if one may look at it, I will not be surprised. It gives you very healthy listing gains as well. So although the grey market premium has slightly come off, but I think it's a good issue in terms of if you are not having enough NBFCs in the portfolio, want to add one which is of good pedigree, I think this could be one.
The other IPO which is open for subscription is WeWork, and today is day 2, and the subscription so far is just about 0.12. The employee portion has been fully reserved, but the others, at least up until now, hasn't seen too much by way of subscription, 0.12. Of all the co-working spaces which have been listed, and recently there were 2. One of them was SmartWorks and the other one is IndiCube. SmartWorks has done very well. SmartWorks listed in July and the stock is up 40% from that level. IndiCube also listed around the same time, again a co-working flexible sort of managed services operator, but that hasn't done too much compared to its issue price. Let's see what WeWork does so far, at least. The first 1.5 day, it's been on the quieter side. But let's put the focus on the other big story as we spoke about pharma, the revision of health scheme rates by the central government and the impact on hospitals. Ekta is now joining in. Ekta.
Well, thanks for that. Yes, the news is that the government has announced a major overhaul of CGHS rates, which is the first since 2014, revising tariffs for nearly 2,000 medical procedures. CGHS, or the Central Government Health Scheme, provides cashless health care to central government employees, pensioners and their families across 80 cities, covering around 4.2 million beneficiaries. The new rates, effective October 13th, aim to fix long-standing hospital concerns that outdated packages didn't account for medical inflation. Analysts estimate the average hikes could be around 25 to 30% across key procedures, with cardiology, neurology, orthopedics and oncology seeing increases of even up to 30%. Now, hospitals such as Max Healthcare, Narayana, Yatharth and Fortis are expected to benefit most given their high exposure to government schemes, with Yatharth probably deriving over 30% of its revenues from such programs, and others such as Apollo at 9% from government channels, Max at around 21.8% from institutions, which includes governments, and Global Health and Narayana at around 18% from these government schemes. Analysts say this move could lift hospital EBITDA by mid to low double digits, improve cash flows, though receivables will still need close monitoring. A revision to the ex-servicemen health scheme, which is the ECHS, now may also follow, which could further aid hospital cash flows. And companies such as Fortis, for example, which have around 4.3% exposure to CGHS and 7% exposure to ECHS, hence will then rebase 11% of their revenue from government schemes. So that's the next step to watch out for. As of now, this is definitely positive for cash flows. Will probably start showing in a couple of quarters, but receivables will be something to monitor, though they have improved.
No, it's useful, Ekta. Fortis is the other one, right? It's also in news because of the IHH bid finally getting the SEBI approval for the open offer. Price, of course, will have to be much, much higher.
Well, yes, Fortis Healthcare has been in focus. This is after the promoter IHH Healthcare has received SEBI approval to finally go ahead with that long pending open offer for Fortis and Fortis Malar hospitals. Now, IHH had acquired around 31.1% stake in Fortis for around 4,000 crores back in 2018 and had announced a 26% open offer worth around 3,350 odd crores at 170 rupees per share. But the plan was stalled due to Supreme Court litigation. Now, with SEBI's nod, the process can move forward after a delay of around 7 odd years. Fortis shares, however, have run up nearly 5x more, 5 times more than that original offer price of around 170 odd rupees. So analysts say that while this news is positive, it raises questions on what the price of the open offer would be. Will it be revised higher? If so, what formula will be used? And or will the open offer now just be a formality for IHH? Sources close to the company have indicated to me that there should be some clarity on the price and details soon.
Thanks very much, Ekta, for that. Gurmeet, you have exposure here in the space, hospitals?
Prashant, we have Narayana in our portfolio. We did have Max too, but I think looking at valuations, we did trim some. Narayana last quarter was a little soft with the Cayman business not reporting great numbers, slightly lower. The Indian business do well. I also like their strategy of focusing in a mix of tier 2, tier 3. So they're expanding in Kolkata, Raipur, Bengaluru, not really as much in, let's say, NCR or Mumbai. So the focus is pretty clear. If you see their average revenue per occupied bed, which is one metrics, that's almost improved to almost 49,000 rupees per bed. They have plans of adding around 2,000 beds. And I think the model is also changing, Prashant, like hotels. It's a combination of refurbishments and brownfield and greenfield expansion, which makes it a little more asset light than what earlier these businesses used to be. So pretty constructive, but let me admit valuations are pretty expensive, including this one on an EV by EBITDA as well as on a price earning. On a price earning is almost 45 times. So you got to be a little careful in terms of taking fresh positions.
Okay, that's hospitals. Finally, Gurmeet, we're in the festive period, so let's end off today's conversation with a festive pick. Now, the stock I was going to ask you about is actually Nykaa, because Nykaa at least sounded pretty optimistic in that Q2 update. Though, I mean, in the past they failed to fire, and we see all these hoardings and ads of Nykaa fashions as well everywhere now. So tell us your thoughts on Nykaa, and if not Nykaa, anything else in the consumer space? I've got a couple of updates over the weekend.
So 2-3 names we've added. If you see the RBI data, the maximum loan now is the travel loan. And I think the Gen Z clearly is spending a bulk of the discretionary income towards travel and hospitality. So we increased weight to Indigo. There was some slight correction also post the Gangwal, another tranche which came in the market. Festive season, they're adding, I think, 400 flights more. Fares typically also pick up, long wedding season ahead, and then you have Christmas. So that's something we've added. We are looking at ixigo. I think I like it's a bit of a tech play, and a lot of good things happening there as well. We're meeting the founder team as well there and see if we can, build more conviction around it. And we are adding some hotel names, including Lemon Tree, including Indian Hotels. So we are playing largely as I said, the travel and hospitality. And one new name which we've added is DOMS, which is into children's stationery, as almost 50% has come now into zero GST. And now they're getting into pens and related categories like school bag. Very good business, 2,000 odd crore top line, 250 crore kind of a profit. So we like the business. It's very good brand recall, and they're gaining market share.
So ixigo you're looking to add. You haven't added it yet.
No, we're not. We're looking to add, yeah.
You're looking to add. And Taj, GVK is also one of the hotel stocks which you own, along with Lemon Tree and Indian.
Yeah, so that's a special situation more, Rima, because eventually I think Indian Hotels will exit and I think more institutional investors will come in. And it trades at 18, 19 times, which is half of or less than half of where other hotels are, despite, metrics being good. So there's a bit of an overhang on Indian Hotels stake. What will happen to that? That's more of, for us, it's a more tactical bet.
Got that. Thank you very much, Gurmeet, for joining in. As always, get into a break. On the other side, Rajesh Kothari, Managing Director, Alf Accurate Advisors, will be joining in. Stay tuned.
Welcome back. Gains intact, 160 up on the Nifty, and mid-caps are buzzing as well. Good time to bring in Hormuz to figure out what he's looking at. Plenty, on the radar or beneath the radar. Hormuz, take it away. What's on your list?
Most of these names have seen a bit of a spike after noon, and it's seen both in the price action and on volumes as well. It is starting off with Repro India, and the biggest single day gain that the stock has seen since May. It's cooled off slightly. At one point was up around 14-15%, and the last 3 sessions the stock has risen 20%. And one of those names which had seen a price volume spike after 12 noon today. We've had 2 lakh shares that have already been traded. The 20-day average here is only 8,000 shares. And the stock had broken above its 100-day moving average at 514, has cooled off slightly from that. It still remains that important level to watch, and has been an underperformer this year, down around 7 to 8% so far, and was down almost 40% in 2024. That's Repro India. And a couple of PSUs with very little free float are buzzing around today. ITDC has found its name back on the list of gainers. They're 16% higher on the stock, and another one that has risen around 20% in the last 3 sessions. Another one whose price volume saw a spike after noon. And take a look at the volumes here. 45 lakh shares have been traded. The 20-day average here is only 4 lakh shares. And as a result of this move, the stock trades above all of its key moving averages. And today's move has also resulted in the stock turning positive on a year-to-date basis after having gained close to 40% in 2024. Hospitals as a sector has done well today. And a smaller name here, KMC Specialty, was up around 13-14% at one point, still holding on to gains of around 10%. The biggest single-day gain since 2020, volumes being the highest since February of this year. We've had over 5.5 lakh shares that have changed hands. The 20-day average here is only 27,000 shares, and the stock comfortably is now above its 200-day moving average, which was around 68.5. The promoter holding here stands at 75%, but still down around 3% on a year-to-date basis. And the last one on the list today is Mindtech India. Third straight day of gains for the stock here as well, up around 17% in the last 3 sessions. The volumes are the highest since April. We have had close to 7.5 lakh shares that have changed hands today. The 20-day average here is only 34,000 shares. So 34,000 shares being the average, we've had close to 7.5 lakh shares traded, although the stock still down 11% on a year-to-date basis, but the stock was up 60% last year and 70% in 2023. So has been a good mover and doing well today on very strong volumes.
All right. Thanks very much for that, Hormuz. So those are the unusual big movers on the back of volumes which we are seeing. Rajesh Kothari is with us, Managing Director, Alpha Accurate Advisors. Rajesh, great to have you back on the program. Thanks very much. We'll talk about what you have in your portfolio, but let me start by asking you what I don't think you have. Do you have a view, or do you happen to own NetWeb, Rajesh? I think we've discussed this when you were in our office for one of those editors roundtable.
No, that was not this company. So we do not own this name. So no comments here.
I see. Have you studied it though? Have you looked at it?
Yeah, we study almost, many companies. So I think what we do is that it's always better to invest in companies which are probably easy to understand, and probably the growth prospects and the visibility, that's something very important. So in this kind of a business, is very important to check the global businesses and the global valuations and the global growth opportunity. So you need to look at it from that matrices and then decide, it's always better a little bit not to get carried away, right? So.
But, if it is the global criteria, then it is very difficult not to buy. Because if you look at valuations, of course, everything is more expensive than peer sets abroad. But if it is about AI spends and data centers and hardware and racks and servers, that's essentially what they do. So it's very hard. You're absolutely right. And sometimes, it works out beautifully, because you see something happening globally and then you kind of sort of try to spot what can one do. It's just that it's already done, it is done well. But it was interesting. I asked you that because somebody was likening NetWeb to something what we saw in the EMS space, in the data center, in the Dixons of the world in the early stage. It looked very, stock doubled and then doubled and then doubled. I don't know. The only similarity between both spaces, of course, is that margins are very low. I mean, that industry has 3-4% margin. This industry margin is also not very high in that sense. What have you done, Rajesh, though, across your portfolio since we last spoke? I mean, if you can give us a brief sense.
So basically, as you are aware, the auto is one sector which we have been overweight for quite some time. And, of course, post-GST is one of the large beneficiary of the entire GST cut. And what is happening is because of that, as I was always saying, the content per vehicle, that opportunity to increase the content per vehicle is further going up because of this cut. And therefore, that means that the revenue growth potential for many such companies is much bigger. Also, many of our portfolio companies have entered into the new technology tie-ups with the global companies. And that also opens up one more new segment to cater to, which is a good thing. So that is one sector on which we remain positive. The second sector, which, within banking and finance, the housing is one space which we continue to like. And I think, the growth here is going to be much better compared to the overall banking segment. Third is the specialty chemical, which we have been positive last 15, 18 months. And we keep adding to this basket. There are many interesting companies which are becoming reasonably attractive. And also the growth is going to be much stronger over next probably 12 to 24 months. And fourth, of course, is the select pharmaceuticals, because here in the healthcare space, within pharma, we have multiple segments. One is hospitals, which we continue to like. Second is, the domestic pharma business. Third is the CDMO. And fourth is the special opportunities like, the GLP injectable kind of a business. So there are a lot of bottom-up stock picking, which is good from the pharmaceutical perspective. So I think these are the four sectors. If you look at our AAA budding BIST, which is since you're talking about more in mid and small cap space, that's basically the kind of sectors what we currently own. Last but not least, of course, EMS is the large sector weight in our entire portfolio. Be it the large company or even the mid-sized companies, we own across the companies within the EMS basket. So these are the 4 or 5 sectors and the key, what I would say, the leaders who have a strong growth. So our portfolio is a strong growth positioning, and we expect it to continue to deliver 20 to 25% earnings growth for FY26.
Hi, Rajesh. Yes, absolutely. I can see that pharma is actually your largest holding in terms of sectors at almost 16% of this particular portfolio, followed by engineering and consumer. Now, speaking of engineering, you have a couple of large MNCs that you've held on for a while, right? The likes of Hitachi, and then on the Indian side, the CG Power, which has been one of your key holdings as well. There's an argument in the market whether the time has come to maybe take some money off these industrial and consumer stocks, maybe move some of it to, consumption. Just tell us where you stand there. And what about power? Because the one near consensus theme in the market is power T&D. So some of the companies that you own actually play in that space. But on industrials, and I also don't see, at least in the top 20, I don't see, too much of defense. So is this something you're thinking about, or are you staying away because of valuations or execution risks?
Well, let me come to the first point in terms of the capital goods. So here we play the power proxy. So power T&D proxy, the biggest expenditure, the biggest beneficiary is going to be the HVDC. That's a big opportunity. That's a huge opportunity. And I'm sure you would have read last week, one of the company which you mentioned, which is one of our top holding, the parent company has entered into the AI, kind of a tie-up, for the global company. So the opportunity for this listed space of those, the global multinational, the opportunity is huge. So one can always get tempted whether one should do profit or not. The important is what kind of PEG you are comfortable to buy at. And till the time the earnings growth is going to be 25, 30, 40% compounded over next 2, 3, 4 years, on PEG basis, you need to keep evaluating, and then maybe you can decide to trim or take some profit book. But we continue to remain bullish on these themes. So that is as far as, the capital goods theme goes. As far as, your EMS space question, again, this is a space which is an interesting space. The opportunity is going to be huge. And while, of course, the stock price have run up, but please keep in mind that every 3 months, new PLI schemes are getting launched. And I think we will continue to do that. So from segment 1 mobile, which happened, 3 years back, to the AC component, which happened after that, to the camera modules, which is happening now, to the hardware side, to the, semiconductor side, it is a huge value chain, and we are importing a lot even today. So you will continue to see more categories to be introduced for this PLI. And the companies which are holding, they are the biggest beneficiaries, and also from the capabilities perspective, they are the right companies who will capitalize on this opportunity. And therefore, on EMS space, I think it is just not 1 or 2 quarters kind of a play. It is a much more, next 2, 3, 4, 5 years play. So that's another space which we continue to like. Of course, you may find it a little bit expensive, but again, when you look at from the PEG perspective, all of a sudden you will find that they are much cheaper. I mean, look at any big companies. They all are trading at, say, 18 to 25 times with earnings of 6-7%. So actually, PEG is far, far expensive. So I would like to break that myth that, the large caps are cheap or mid caps are expensive. No, when you look at on PEG basis, in fact, the mid cap will continue to look a little bit more attractive compared to the large cap.
I can see Sirma on your top 20. Do you own the others as well? Amber, Dixon, or only one holding in this space?
So, well, we own Dixon in our multi-cap, AAA IOP portfolio. We own here, a couple of names. As you can see, our large holding is also a semiconductor play. And then, of course, we have a kind of companies, what you mentioned, and then we have another 2 companies which are not part of top 20, but they are next to top 20.
Next to top 20. Got that. Good conversation, Rajesh. Thank you very much for joining in and giving us some perspective on a lot of these themes that we have discussed. You have a good rest of the day. Well, the market's on a very steady wicket, so let's figure out what's happening in the F&O arena. Nigel, what's the latest here?
Well, the Nifty Bank, that's the one that's clearly broken out. Now it's trading above the 20, 50, 100 and 200 DMA. So the Nifty Bank is the one that's really leading the charge in the last few trading sessions, and that bodes well for the Nifty as well. The Nifty PCR, however, it's moving towards the higher end of the band. It's at around 1.35, but that could be a factor that tomorrow we have the weekly expiry that's played out. And now you're having those put writers that are coming into play. So just take a look at the massive addition we have seen. 25,000 put, that's the most active option today. Extremely aggressive writing is what we are seeing, and the premium in a single trading session has come down from around 120 rupees to around 27 rupees. So aggressive writing is what we're seeing at that level. As this is the case at around 25,050 put as well. Out there as well, the premium has come down by close to around a fourth. At the start of today, it was around 160 rupees. The last time I checked, it was around 40 rupees. Now, some out of the money call buying, that's making you money. If you took a bit of a punt in Friday's trading session towards the close, and you bought this 25,100 call for around 12 rupees, well, your money has more than tripled. So that's the one that's, in fact, the call buyers as well are making money at these levels. And just looking at the screen, for the last few trading sessions, we have been seeing that the FI shorts have been intact. My gut is that today we could see some bit of that short covering that plays out, going by the way the screen is moving in today's trade. Let's focus on a few stocks. Nykaa out of nowhere, that one's seeing big buying out there. Stock up by more than 5%. You have open interest as well surging up. So fresh buying is what we're seeing on that name. As is the case with IDFC First Bank as well. Good amount of fresh buying is what we're seeing on that stock. Well, tech was a sector to go ahead and short. And that's precisely what's being played out. However, today a stock like HCL Tech has come in for a big short covering bounce. The stock has popped up. Open interest is lower as well out there. While on the flip side, metals was the stock that was seeing good amount of fresh buying. Now, in today's trade, there are some mild shorts that are getting accumulated on Tata Steel. So keep an eye out on that stock. And finally, RBL Bank, the stock that's already in the ban. I'll tell you what, every time you see the shorts creeping into the stock, they're getting a little bit nervous. So there is some shedding that we're seeing out there. However, I think the stock continues in the F&O band for a couple of more trading sessions as well. A mild short covering bounce is what we're seeing on that one. But Monday afternoon, the screen is green. The data points are looking quite good. Let's see whether or not the bulls can drive home the advantage. Back to you guys.
Very helpful, Nigel. Thanks very much for that. We'll take a quick commercial break here. We'll come back with what to buy or sell today for reverse trades when we come back tomorrow. Coming up.
Holding on to all their gains, and last 20 minutes to go, Mitesh is back with us with a few BTST calls. Mitesh.
So on the BTST side, I have two calls, and both of them, both of them are on the buy side. I have the first buy call is on BSC with the United Spirits with a buy at 1339 for targets of 1380, and sorry, I think I covered United Spirits already. Sorry, apologies for that. The first buy call is BTST Siemens with the stop at 3250 for targets of around 3390. And Sun Pharma is a BTST as well. Keep a stop at 1644, look for targets of 1670.
Okay, Siemens, Sun Pharma, and earlier at 2:30 you were telling us about BSC and United Spirits. Well, let's move on now. Now, Tata Capital's IPO opened for subscription today. Earlier today, we had a chat with Rajiv Sabharwal, the MD and CEO of Tata Capital, to discuss the company's strategy. We asked him about his NIMs, his ROA, which is lower than peers, and what the company plans to do about it, to which he said that you need to sort of balance risk with reward. His margins should be looked in context with his credit cost, which is also lower than peers. Listen in.
We've been growing at 25% plus over the last few years. We believe India provides that opportunity of growing at that space. And it also happens because we are present in all segments. Retail and SME, which form about 88% of our book, itself grows at about 17 to 18% in the Indian credit market. And besides this, we are also present in the corporate space. So being present helps us. In terms of margins, I think our margins should be looked at with perspective to our credit costs. Our credit costs have been the least in the industry. If I take away the merger of Tata Motor Finance, Tata Capital has always had credit costs of below 1%. As far as the future is concerned, I think we've always looked at how we can add new products and grow them, which provide better margins. There'll be some products where through the raw material, the impact will be seen over the next 3 months or so. So I think we are really expecting Q3 and Q4 to be really bumper quarters for this year. When you talk about the credit quality and such issues, we've been pretty quick on responding whenever there were challenges. In fact, when we saw challenges in certain segments, we became tighter and more conservative. And that was reflected in terms of our growth in those areas also. As I mentioned just some time back, we feel the worst of credit cost is behind us.
Okay, all right. Well, let's welcome our next fundamental guest. We have Nirav Asher, who joins us from Latin Manharlal Group, who joins in. Hi, Nirav. Good to have you on the show. Thanks a lot for joining in. Well, NetWeb, that's one stock that's grabbed everyone's attention in the last 1 month or so. Massive move is what we're seeing. Post this big move, what's your take on the company?
Well, good afternoon and thank you for the invite. I think NetWeb has been a very, very impressive performer in the last 1 month. We've seen a massive surge in the price. And this is on account of the fact that the company has come out with its annual report and its presentation, wherein they have highlighted the areas in which they are working, very, very exciting growth prospects, because the company is into high-end computing services, it's into supercomputing, it's into cloud-related services, where there is an immense growth potential. Apart from this, the company is also catering to high-end data center servers. So the prospects are very, very strong, and they have tie-ups with companies like NVIDIA. So I think the growth prospects look quite exciting.
Right. Nirav, hi, good to have you here. So, things like NetWeb, you own, just as a disclosure, you own it, right, in the portfolio?
Yes.
And you owned it for a while?
Yeah. Yes.
Okay, and you will continue to own it?
We will continue to hold it because we feel that this is just the beginning.
Okay. No, I completely, I just wanted to make that, because, for viewers, I mean, sometimes these things, people watch it and they say, well, okay, let's see how this, and when stocks move up so rapidly, for many, it's just impossible to hold back then. But you're saying it's, even fundamentally, it's just as a starting, it's early days. even though the stock price has moved the way it has?
Yes, because the kind of areas which they cater to, like cloud is there, supercomputers is there, data center servers. All these things are yet at an inception point as far as the economy is concerned. So there is immense potential for data centers, etc., going forward, artificial intelligence, high-end computing services, etc. So this is just the beginning. That's what we believe.
Got that. Fair enough. You know, we'll have. I think the IIFL is the only broker who's got coverage, and their estimates show that on F527 basis, it's trading at, I think, 45, 50 times. But there are many in that space, you know, generally overall, which are trading at 40, 50 times a year forward earnings. So yeah, but stock's done very, very well over the last 1 year or so. Well, let's talk about another story, and we'll come back to Nirav in just a bit. Now, 7 years after the ugly spat between Cyrus Mistry and Ratan Tata over Tata Sons, another boardroom battle is brewing at what is one of India's oldest and largest conglomerates. That is, of course, the Tata Group. Hormuz is here just to break this down for us. Hormuz, over to you.
You know, indeed. And there is a fresh battle that is brewing at one of India's oldest and largest conglomerates. And there are reports of infighting that have emerged almost 9 years after the Ratan Tata versus Cyrus Mistry battle. And so much so that sources are now telling CNBC-TV18 that this has landed at the doorsteps of the government. Now, what is the bone of contention here? The bone of contention is that the power struggle over the leadership within the Tata Trusts. Noel Tata is currently the chairman of the Tata Trusts after Ratan Tata's passing. And he's also opposed to Melly Mistry's attempts to get a board position. Now, he's also opposed to him getting a leadership role at the Tata Trust. Now, who is Melly Mistry? He is a director of the Mayor Polonji Group. He's a strong supporter of the late Ratan Tata and an estranged first cousin of the late Cyrus Mistry as well. Now, during that hugely public spat between the two, Melly Mistry was in favor of Ratan Tata during that period. Now, what are some of the recent developments that have happened at Tata Sons? As a result of this public spat, there was an amendment made to the Articles of Association during the 2022 AGM, which prevents the same person from chairing Tata Trusts and Tata Sons. And as a result of which, Noel Tata is now the chairman of the Tata Trusts, while N. Chandrasekaran is the chairman of the Tata Sons. Now, what has happened here is that the amendment was approved by shareholders, and as a result of which, the two entities were legally separated. Now, as early as last month, on the 11th of September, the 3-hour-long board meeting ended with the removal of Vijay Singh from the board of Tata Sons. Now, the trustees usually who vote in consensus with decision making, it was a 4-3 vote in favor of Singh's removal, where despite the fact that Noel Tata, Singh himself and Venu Srinivasan continued to vote in favor of Singh to continue on the board. Now, who is Vijay Singh? Now, 77-year-old former defense secretary, so a seasoned bureaucrat. He was one of the late Ratan Tata's closest confidants as well. And some of the issues raised in that meeting was the fact that he's above the cutoff age of 75, now that he's 77. And some of the issues raised by Pramit Jhaveri, one of the trustees, is the fact that the reappointment of Anita George as an independent director with consulting all trustees was not done. He also raised the fact that Article 121A, which requires all investments, acquisitions or disinvestment proposals above 100 crore to have prior approval from the trustees, and that was not being followed. Now, some of the issues raised here. What Noel Tata and Venu Srinivasan said during the meeting is that Singh's removal will set a very damaging precedent. And what further exaggerated matters was the fact that Darayas Khambata, one of the trustees as well, he nominated Melly Mistry to the Tata Sons board, something that Noel Tata went on to reject. Now, what are the challenges that Tata Sons is facing? Other than all of this, there's also a lot of pressure to go public from the Reserve Bank of India. There is a lot of back and forth over this. There are also questions over transparency, governance, future control as well. So, a lot brewing at Tata Sons. The sources are telling us that the meeting has now landed at the doorsteps of the government. Only time will tell where this boardroom battle is headed.
Thank you very much for that. Well explained. Get into a break. On the other side, more market talk. Stay tuned.
Welcome back. Well, let's focus on the hospital stocks because they are clearly the sector of the day. We're still in conversation with Nirav Asher. Nirav, what is your take on the hospital stocks? All of them have popped up in trade. This good news has been digested, or do you think there is some value in a couple of these stocks?
Well, I think there's been a revision in the CGHS rates, and that has given a boost to the hospital stocks. I think there's been a lot of interest in the hospital stocks by the private equity players, and private equity investments have been on the rise as far as the hospital sector is concerned. The hospital sector has reported impressive rise in the occupancy ratios with improvements in average revenue per occupied bed in the recent past. And I think, but if one were to take into account the valuations, they are looking very expensive at this point of time. Most of the hospital stocks are trading at valuations close to 100 times price to earning multiples. So I think, barring a few stocks like Aster DM Healthcare, which is looking quite reasonable from a valuation perspective, the rest of the stocks are looking quite expensive.
Nirav, have you all studied LG Electronics? That's the large IPO which comes tomorrow. On a trailing basis, the PE is 35 times. So the forward multiple will be even less. And this compares it favorably with, say, a Havells, which is 45 times forward, a Voltas 40 times, a Blue Star 46 times. So just prima facie, we've not gone into deep analysis, but it does look attractive valuation-wise.
Well, that's true because LG Electronics is a very known name. They have a very strong brand presence and a strong distribution network across the country. So I think a valuation of 35 times definitely warrants investment from a listing gain point of view also.
What we can do is that it is just coming to you. We had Sanjay Mukim also join us in the morning from JP Morgan. And a bunch of stuff we spoke with him about. So let's just quickly play out some of those sound bites, and we're back with Nirav in just a bit.
Let's say an India-US deal could alleviate some of the pressures on the Indian equity market, and you may see a bounce on the announcement of one. But it may not necessarily be redemption for the underperformance that we have seen so far for MSCI India. See, India, everybody agrees, has a lot of potential in the long term or the medium term, right? There's all the known tailwinds of continued urbanization, the manufacturing drive that the government's pushing, urbanization, that's likely, the demographics that everybody agrees to. So those factors sustain, and India therefore remains a place of inquiry for everybody for the long term. I think the challenge, at least in the near term, is the fact, like I was saying earlier, that other markets have delivered much sharper bounces. There's greater clarity on many others, let's say tech-related sectors, of course. And a lot of investors were not necessarily positioned to participate in those rallies early on. And therefore, you see continued rotation out of India, which had been owned by them for a while, into these newer momentum areas. EPS expectations for the S&P in the near term are actually being upgraded. Right now, you can debate why it is happening. It's only tech-driven, or that you will cut them too much after the Liberation Day tariffs, etc. But nevertheless, for equity investors, you're seeing upgrades in the S&P EPS number. How sustainable they are, we can all debate. But in India, we have not seen that earnings momentum as well. So you need to start to, let's say, catch up on those trends, deliver some bottom-up momentum before you can claim some interest from foreign investors. There doesn't seem to be a leverage problem in the corporate sector, but possibly a leverage problem in the government sector. Looking at more consumer-oriented stocks in the near term makes a lot of sense. Now, the challenge, of course, investors face is many of the stocks have already gone up. So the question is, where is it not priced? Where are further surprises likely? And we would argue that where there is elasticity to the price cuts that have come through is where we would continue to look at. So maybe some of the auto-related names make sense. The discretionary, obviously, you'll have greater elasticity to price cuts than staples. So those are the sectors where, I would agree with the consumer over capex in the near term, but more discretionary than staples.
Okay, that was a view from JP Morgan that we got earlier on. Well, one more leg of the market that's working fairly well is the so-called new age internet stocks. We've discussed Nykaa, of course, that's one of them. The other is Delivery. Then there is Ixigo, Leach Avenues Tech. Some of these are doing fairly okay. And then, of course, there's Eternal, the big one, which is nicely coasting along with a 2% gain. Nirav, any picks out of this lot? And it's a wide basket now. I've been thrown in an urban company recently listed as well. But you tell us, would you back anyone? And if yes, why?
I think Nykaa has reported a strong set of numbers. The quarterly updates was quite strong. And it's on the comeback trail. So I think Nykaa and Honasa are looking good from a medium to long term perspective.
Nykaa and Honasa. Okay. All right. Got that. Okay. So that's on the side. On the NBFCs, I mean, there are lots of names. And today is a great day anyway for NBFCs, from Shriram to Bajaj. I'm just seeing Chola Investments. Let's pull up the Chola Investment stock. 5.5%. Big surge coming in on Chola this afternoon. Again, what's the narrative? Are you better off right now allocating, say, fresh capital to tier 1 banks, or would you look at NBFCs? And if it is NBFCs, then which one would you go for? And maybe a thought on Chola specifically, if you can give us one.
I think we would stick to Bajaj Finance. So I think recent update has been quite strong, 24% growth in the area. So I think we'll stick to Bajaj Finance.
Got that. Nirav, any IT stock, mid cap or large cap, which is attractive at... any mid cap or large cap IT stock which looks attractive at this juncture, or it's still too early to buy, even as a value pick?
I think Coforge is looking quite good because we are expecting a 6% at least quarter-on-quarter growth. And that's the best at this point of time.
Okay. All right, Nirav, we'll wind it up on that note. Thank you very much for joining us today. So since we've got just about a minute or so left for the day to end, let's take stock of what's been a really great session, actually, a flying Monday for the bulls. 25,070 plus on the Nifty, a gain of nearly 200 points. So it has been looking pretty good. And, it's not a day where 3 or 4 large cap stocks alone have led the market higher. The good thing is that it's been very diverse across many important sectors, and it's spread to mid caps as well. To start with, of course, there is the whole hospitals play in the market, with Max Healthcare leading the charts, 6.5% higher. Then, of course, financials have had a phenomenal session today. Look at Shriram Finance, 4%. You have more names: Axis Bank, Kotak Mahindra Bank, Bajaj Finance, which we've been discussing the business updates over there, looking fairly good. Let me see the final rates on HDFC Bank. Again, with 10% growth, it's met the mark and made most of the people happy on the street. So 1% up on that stock as well. And then the other good news is ahead of earnings season. Maybe it's just positioning before the IT earnings roll in. But for what it's worth, look at that, 3% on TCS. So very, very decent moves coming in on the IT names as well. Infosys 2% higher, HCL Tech, the entire lot. Good buying on auto as well, by the way. Bajaj Auto, Maruti, these stocks have seen a fair amount of strength as well. So pretty well-rounded day for large caps.
Well, on the way down, though, Trent and Avenue Supermarts were under pressure. Trent just came out with the Q2 update. The top line, the standalone revenue has gone up by 17%. This is less than the 19% growth in Q1. So the street appears to be a bit disappointed. The stock ends down, top loser on the Nifty, and that's down close to about 2.5%. And other than that, you even had Avenue Supermarts, which went home with a fall of nearly 3%.
Absolutely. That's the bell as it goes off, and we are now 180 points. The adjusted close shouldn't be very different. It's not as if there's been a large amount of movement one way or the other. So 25,075 is where we are at on the index by close. So pretty good close. Market breadth, though, negative by a little bit. 1,700 stocks lower and about 1,400 stocks are higher at this stage. I think we're going to wrap up on this edition of Closing Bell. From all of us here, it's goodbye. Thanks for joining us. But markets forward will pick up and wrap up things for you and look ahead as well. Stay tuned.